Thank you for tuning in to this pre-market pulse scan for trading on Monday, November the 7th, 2016. You're looking at a chart of the mini Dow futures contract. As you can see, the market gapped up 200 points Sunday evening during the 6 p.m. open Eastern Standard Time. And here on this the 4-hour chart is my intraday chart I like to use. You can see we're still below the thin layered Kumo cloud here, but because of the gap up, the market has now pushed itself from a negative pulse waving situation to a positive pulse waving situation. However, I should point out that if you look at the post wave price triggers for this week, it's still below the price entry point, well below the price entry point for a long position. Therefore, I see this is setting the market up to crash it down after the election. It should be noted that some kind of a dead cat bounce would come because you do not see 9 days down in a row without some kind of correction. That's just not how things work. So this was inevitable. All right, let's take a look at the daily chart so you can see what I mean by that. All right, now you can see here we had 1, 2, 3, 4 down days in a row in the Dow futures before this gap up right now. Okay, so it's in an overbought situation because of the gap up on the daily chart. And like I said, it's still well below the Kumo cloud. They were very successful in bringing the market, down, to a level where it's already in a bearish position, and then they can just hammer it down from here and blame it on anything that they want. They can say, "Oh, this happened because of this happened because of that." Doesn't matter what they say. The bottom line is, whatever they do is only to frighten the people, because technically speaking, like I've demonstrated time and time again in multiple videos, the Dow Jones has at least 8,000 points of air and Fed stimulus built into it. So it can sustain an 8,000 point drop and still be bullish. As long as the Dow remains in a range of 10,000 to 12,000, technically, historically speaking, that's good. All right, so that's where we are here. But I see the market going up, as I've demonstrated time and time again as well. Any kind of correction that's going to come to the market will be short-lived, period. All right, who cares about the Dow, right? You want to know what's going on with these metals. All right, looking at silver and the pre-market, you can see here, let me pull it up a little bit better here for you. You can see how it's pretty much dormant. There's not a lot going on here. All right, here's where we were Friday. Here we are now on Monday. So we gapped down, but it's been a dormant situation. It's not like it's trending down. It's not like crashing down. You're not hitting new lows. You're just kind of like on the side here, just moving sideways. Trying to come out of an oversold situation, but not really. And it's just kind of hanging around. So the gap is going to have to be dealt with, and it should, but it's still overall in a neutral to slightly bearish situation. All you're doing is just moving sideways though from this last move here. So not a lot happening in that respect. Okay, the real story is in the gold, gapping down $16. All right, here's where we ended up on Friday. Here's where it is now in the open. This gap's going to need to be dealt with too at some point. This one though is trending lower. Okay, after the gap down, it continued to trend lower. Came off of the oversold situation, but like I said, not really, because it hasn't taken out any overhead resistance points. It's just kind of hanging out here, looking weak. But I should point out on an intraday chart, this part right here is extremely sexy. This is a huge ramp, multi-layered ramp. This should catapult prices back above the 1300 level easily over the next several hours. So we'll be watching this one on the gold. And as far as from a pulse wave perspective, I'll show you what that means in just a second. Okay, so this brings us to the UGLD. You can see this gap down here. All right, here's where you finished on Friday. All right, and that's the 1245 handle, and then here we are at 1145 here now in the pre-market. All right, and this is the UGLD. So it gapped down below the 1145, so that means it's already below the first pulse wave short. It's already below it. All right, but right now not interested in the short on that. I'm looking for the pulse wave long entry point on this one. So what I would do is I will wait and see how this thing opens and see how the market behaves. The best thing to do is to set your entry points on the pulse wave price triggers on the open, regardless of how far away the market is from that entry price, so that if and when it does pop, the market will take you along with it. So that would be my call on that. All right, looking at the silver, same thing, very steep up ramp here. This should help catapult the price back up to $20. So be watching that as well. And like I said, in the pre-market, the market has gapped well below entry price. I will go ahead and place the pulse wave price triggers. There is a rally alert on the USLV. There is a rally alert. You don't have a rally alert on the UGLD on gold, and that's probably because of that trending situation. So the market already saw that coming, and that's why I was trying to explain to everyone before. The pulse waves can lead the market 3 to 5 days out, so it's ahead of the curve. So that rally alert on the silver on the USLV, you got to take that to heart. You got to look at that, and you can't dismiss it. All right, now here's the JNUG. Okay, so same thing here. You can see we've gapped about a buck from where it closed on Friday. So with the JNUG, you're going to want to watch this one as well. It's not really that far away from entry price. You do have a crash alert on the JNUG, and it did in the pre-market trade below the first pulse wave to sell short. But again, I'm not looking in the sell short on the 3x longs. I'm looking at the actual to buy these shares. So the best thing to do is to have the trade tickets ready and working, so that you can take advantage of that when the market does move. Okay, looking at your JDST, it got a pop, rightfully so. Here in the pre-market, it does have a rally alert on that one as well, and it did pop. So it's you have your entry point. You know what to do on this one. Wait until the opening bell and go ahead and place that, and make sure you put your stops in on that one as well. Taking a look at the overnight low. The overnight low is at 26.50. Okay, so you have your weekly pulse wave price triggers on that, and that's safe to play after the open. Don't be concerned about pre-market action and things of that nature. Just let the market do what it do. Wait till that opening bell, and then place your tickets accordingly. All right, that's all you have to do. If the market's trading above your price at the open, then all you have to do is place your order as a limit. It's just that simple. And let the market come back down to you and trigger you, and then take you off with it. All right. One thing to note though, in the JDST, you have both rally and crash alerts. Let me remind you what that often means is that both the buy side and sell side are at an equilibrium. So it is not uncommon for the market to both rally and crash in the same week. So just be mindful of that. But by the end of the week, it would have already chosen a direction. So a direction will be chosen here, one way or the other. If the precious metals are going to continue to get smashed by the Fed, so that they can fund the operation of propping up the U.S. dollar and the stock market, then you're not going to have a choice but to ride the JDST to glory. So let's take a look at dust and see how that looks. All right, dust is, same scenario, gap up from the Friday. As far as dust is concerned, you do have a rally alert on that one. And let's see here, the market did hit up to 39.17. Yeah, so 39.17 and 38.25 is where it's at now. The low for this is 38.08. I don't know if it's going to get to the pulse wave entry or not. That's a good question. This had quite a move already built into it. One thing to note though, and remember you're looking at an intraday chart, not daily or weekly, but just remember it's not pulse waving. Okay, on your daily or weekly charts, it is not pulse waving. All right, so even though you got some bullish momentum coming into it only because of what happened in the futures overnight, just look at the long range picture that, okay, so you missed this particular trade. It's okay. We don't chase markets. Watch the trend line resistance. Okay, if trend line resistance is broken, then that's your entry point. Just remember, we enter the market on the pulse waves, but we also enter the market on the trend lines. So a break of trend line resistance or trend line support is an entry point, and it is a strong entry point. So always remember that, okay? So do not be afraid to enter on trend line resistance and trend line support breaks if the market gaps up or below pulse wave. All right, so a gap up above pulse wave is not a miss. You don't have to chase the market. You just go ahead and put your ticket in as a limit order to see if the market pulls back to you and then takes off. If that doesn't fill, then you go ahead and you place your buy stop at the trend line resistance. Okay, so that's how you want to work those. All right, so any other questions, hit me up in the trading room. We'll go over it. We'll go over this week's pulse waves and how to play those. Just wanted to give you the pre-market pulse scan to see how the market's moving and how we can do what we need to do in that. All right. So remember, take what you can, give nothing back, because bulls make money and bears make money, but pigs get slaughtered. Peace.